Hi, Hamid. I asked about Bumble when it's at $7. Your thoughts then if it goes back to $3? You mentioned it's a greater opportunity to buy more, and now that it's back to $3, are you waiting to go low?
So when I say I love a company at a lower price, even more than at a higher price, I always caveat that with like all else equal. And with Bumble, yeah, it's at a lower price, but there's one thing that we know today that we didn't know a week ago, or like a little more than a week ago when they reported, and that is that they're now projecting a 17% decline year over year for Q4 and a quarter over quarter pretty substantial decline. I forget what the exact number is. It's roughly 10% decline quarter over quarter. That is not something I was expecting with Bumble. So all things are not equal. Meaning, if Bumble's projection for Q4 was roughly 245, 250 million in revenue, and the stock just went down, but by the way, and 60 million of cash being added to its balance sheet for Q4, and all of a sudden the stock was trading at $3, you better believe I'd be like backing up the truck to add some more. But in this case, the revenue projections did go down pretty substantially. So there is this negative aspect that happened, that additional information was provided to us that makes me less excited, despite the fact that the stock price has gone down. One of the other things that concerns me, I do think that the stock price has gone down too much, like relative to what they're even projecting. So normally that should still present an opportunity, and I think it does, which is why I'm holding on to my shares. I'm not selling. I haven't sold any yet. In fact, I bought some more with plans to sell some of my higher price shares. But one of the things that happens when the stock price goes down so substantially suddenly and gets below $5 is it creates this sort of high risk environment around the stock where the CEO gets criticized quite a bit. That might cause fatigue, and that might cause morale issues internally. It might cause the CEO to step down. It might cause the CEO to get fired. I mean, like, there's all kinds of things we don't know. By the way, I know none of these things. I'm just saying these are all possible things that it makes the risk higher, that the stock price has also fallen roughly 40% just in the past couple weeks. So that those are the things that make me less excited all of a sudden, than how I would have viewed it had the company continued to perform. They're projecting to perform at a similar level, which they're not. Then I would have been buying a lot more shares at the $3 mark. Even now, I'm sort of tempted to buy more shares, to be completely honest, but I want to wait and see what like I want to see more interviews with Whitney. I want to hear from her. I want to have her reiterate how excited she is about the stuff that they're working on. I want them to be talking a little bit about like their internal testing of their new AI product, and it just seems like it's going to be a slam dunk. I mean, like, I want to hear some excitement from the team before I pile on.
That's another benefit
But yeah.
of doing the tax loss harvesting the way you're doing it, where if something does come out between now and December, where you decide, oh, you know what, I do want to add more Bumble shares. Well, you already did. You just don't have to sell
I
them
don't have to sell
necessarily.
them. That's right. That's
Yeah.
exactly right. Yeah. All right. What else do we have, Adrian?
All right, going on to another Bumble question. Bumble also recently paid off TRA and updated stock ownership compensation. What does this signal as far as possible acquisition?
So the TRA is something that I don't fully understand why that was an agreement that they had, or like what the circumstances around that agreement were. But they had shareholders that had this sort of like tax beneficial treatment, that they would get paid out as part of the profits ahead of all other shareholders. And this was carried as a liability on their books, approximately a $400 million liability, which they bought out last quarter for 186 million. I see that as a very, very positive thing. They basically got rid of $400 million of liability for $186 million, and they had the cash to do it. And they didn't do it last quarter. They just announced that they are doing it in Q4. So their cash position, which at the end of Q3 was roughly 307 million, is going to go down by 186 million, so to roughly 121. And then whatever cash they add as a result of their business operations this quarter will be on top of that. So their cash position is going to drop pretty significantly in Q4, but that puts them at a better position because A, they don't have to make these payments out anymore, and therefore they're going to be more profitable than they would have been otherwise. And it cleans up their books to some degree, which I think anything that is like a weird setup or agreement or arrangement with some third party is usually looked at as a negative thing by the investment community. So getting rid of the TRA was a very good thing in my view.